COVID-19 economic consequences are compounded with the implementation of the Movement Control Order since March 18. With the unprecedented quarantining of huge subsets of the population, the disruption in economic activity is expected. During the lockdown, Bursa KLCI dipped to its lowest point of 1,219 one day after the MCO. It was the lowest point to Bursa Malaysia for the last 10 years since subprime mortgage crisis. For a moment, a layman who has not invested in the share market might not feel the impact at all. With no equity in the local bourse, the ups and downs of share price simply did not affect them. However, in reality, no one is excluded from the impact. As requested by the law, all employees, be it government or private, has to invest their income in one of the sovereign funds, with Employment Provision Fund, the EPF, most relatable to everyone. With 14.09 million members in 2018, around 43% of Malaysian population are EPF members. With the great responsibility entrusted to the GLIC, EPF fund was a crucial investment for the whole nation. With declining saving rate, the role of EPF for retirees are getting more important in the country, and 2020 will be a bigger challenge for the GLIC, as the COVID-19 pandemic will likely drag down an already soft global growth. Bursa's performance is highly related to the performance of EPF. Currently, 72.9% of EPF investment is domestic investment. For Sharia, the universe of assets that was invested in are mostly in domestic markets due to Sharia compliance. According to EPF disclosure, 39% of the GLIC investment comprises of equity. That translated to 342 billion ringgit in third quarter of 2018. Relatively, EPF investment strategy is considered conservative. 49% of its asset is fixed income. Given that equity investments are the key contributors for EPF return, this may explain why the Provident Fund has declared lesser dividend in 2019, the lowest since 2008 after the meltdown of the global equity markets caused by the global financial crisis then. A look on the top 30 equity holdings by percentage of issued shares in 2018 revealed Malaysia Building Society Berhad, RHB Bank Berhad and Malaysian Resources Corporation Berhad as its leading equity holdings. All three major holdings of EPF declined following the market, with MBSP and MRCB dropped more than 30%. The decline reflects the drop in profit in the companies. RHB remained profitable in the second quarter, albeit recording a 35% drop in net profit to 400.7 million ringgit. On the other hand, MBSP and MRCB both registered losses. MBSP records a modification loss of 512.6 million ringgit and 12.5 million ringgit net loss for second quarter, while MRCB reported a net loss of 219.6 million ringgit. A look on the related companies over the past one-year period shows EPF's equity portfolio influence. Malaysian Resources Corporation Berhad or MRCB is among the dominant names with frequent relations to other companies related to EPF. EPF was thrown into the spotlight this year over its lowest dividend for conventional funds since 2008. During the Asian financial crisis, its dividend was at 4.5%. In 2019, the dividend was only 5.4% for conventional and 5% for Sharia. Only a few years ago, EPF dividend reached its all-time high in 2017, but it was steadily declining since that year. On top of the volatile market, the withdrawal that was offered through Prihatin stimulus package also affected EPF. Based on a survey by the Department of Statistics, 41.2% of respondents has applied for EPF cash withdrawal. In March, EPF also lowered the statutory employees' contribution rate from 11% to 7% to assist in supporting members' monthly disposable income. The pressure exerted to EPF was not an isolated case. It has the same implication to most GLIC in the nation too. A look on EPF connection as a shareholder with other shareholders-related companies revealed the deeply intertwined Malaysia GLC and GLIC corporate scene. If we take a look on the connection, private investment firm from US, Dimensional Fund Advisor, appears among the dominant connection. Meanwhile, kumpulan wang persaraan KWAP, PNB and Lembaga Tabung Haji are among other GLCs in the radar. That means most GLC has similar portfolios as EPF, or at least invested in anything that was invested by EPF. A combination of demographic changes, early retirement, and longer life expectancy have placed pension funds such as EPF under greater pressure to achieve investment returns to meet their growing liabilities, especially when equity investments are underperforming due to market volatility. Optimists would like to believe that the current market downside was temporal and will not affect the sustainability of the provision fund. It certainly holds truth that the stock market will rebound, but the true pressure of EPF is a structural one.